my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets. I'll start with New York coffee. It's been a while since I wrote or spoke about New York coffee, but it doesn't seem as if I've left at all. Last time, some 4 weeks ago, prices were hovering around the middle time of the June to November 2020 bullish shift pitchfork, currently at 133.60. Today, they are seemingly much the same. At that time I wrote, and I quote, "This was also when we saw the combined overhead resistance of the 50% Fibonacci line of the big old 2016-2019 move at 133.55, as well as the middle time, currently 137.25, of the October 2019 to February 2020 bullish shift pitchfork, starting showing up, stalling prices for all of last week." End of quote. Well, right now, though the middle time quoted is higher, we seem to be suffering the same effects. We had a big combined key reversal down and bearish engulfing pattern on Friday after the rise from the recent V bottom. I'll just transpose the final parts of my commentary from 4 weeks ago to today, as it is still seemingly quite valid. I quote, "Overall, the market is gradually edging its way higher over, below and around the two bullish middle times. Further below, there is still the same congestion from December last year till mid-February that has been there for such a while. But the longer term supports start showing up in a slightly lower Fibonacci congestion zone between 121.5 to 124.10. As edging up and out of this zone, we have the gently rising medium moving average. That's currently 127.45. Meanwhile, on top, we have over the middle time of the October 2019 to February 2020 bullish shift pitchfork, we have the 2020 high at 136.80, and then congestion from the December 2019 high at 142.80 on upwards. However, over all of this, unless otherwise proven, the gently rising bullish shift pitchforks, specifically both middle times, are the bullish incentive." End of quote. London coffee. The peak of the market 8 weeks ago, as you can see if you look on a bigger scale, was all part of a false break higher from the sideways triangle pattern that we've seen since summer 2020. The downtrend of this pattern, currently at 14.05, was made up from broken September 2020 to date downtrend, whilst the uptrend of this pattern is the still relatively solid October 2020 to date uptrend, currently at 13.57, partnered since December by the long moving average, currently at 13.60. It's a formidable looking combination below. However, I would add a finesse to this pattern, two parallels, one to the downtrend and one to the uptrend. The downtrend one has a more recent early March to date downtrend, currently running at 14.14. The uptrend is a late January to date uptrend, currently at 13.49. Both are only 2 pointers, but aesthetically they are pleasing. So, overall, we are back within the main sideways triangle pattern. This doesn't mean we have seen the last of the false breaks. There may be more, so watch out. It just looks at this time that the downside is more secure than the top side, and we are gradually closing into a cusp, though it is still more than a month away. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.